All right, let's go ahead and get it started. Enjoy the intro. All right, family. Welcome back to another edition of Melanie Economic News. All right, we're gonna go ahead and get it started right here. Today is Sunday, November 22nd, 2020, and the time is at the recording at 6:26 p.m. All right, so we're gonna take a look at some of these futures that we'll get ahead of time. All right, so right now, and this could change because it is Sunday here. Overseas markets are already they're already working, but here looking at the S&P futures, they were up by 25.25. The Dow futures is running negative about 11 points flat. The Nasdaq futures are up 21.50. All right. The Russell 2000 futures are up about 1.30. All right. All right. We switch over here. We're gonna look at some of the overseas, and the FTSE 100 is up about 17.10. The Nikkei 225 is down 106.93. All right. All right, so let's get into a little bit of some commodities here. Crude oil. Crude oil is up about 5 cents to about $42.47 a barrel. All right, to get into some currencies, the euro to the U.S. dollar is up one is actually down to about 1.1859. All right, the 10-year bond is at 0.8290, and the GBP to the US dollar is up about 1.3296. The Japanese US dollar to the Japanese yen is 103.844. All right, and then we take a look at the VIX here. All right, the VIX is at is up 59 cents, is 59.59 to 23.70. All right. All right, get into some cryptos here. Bitcoin to the US Bitcoin US dollar is up $652.15 to about $18,455.02. All right, the CMC Crypto 200 is up $9.24 to $352.74. All right, that part of the financial news is from yahoofinance.com. All right, we're gonna switch over here to kitco.com, and it's loading up right now. Shoot. Hold on, gotta refresh it. Exactly. Sometimes it goes crazy. All right, sorry about that. All right, we're looking at the we're at kitco.com right now, looking at the annual prices for precious metals market. All right, the world market is closed. All right, it'll be opening up in a few hours, in about an hour, according to kitco.com. And let's get into it. Gold is up about $4.40 to the asking price of $1,871.40. Silver is up 11 cents to $24.25 asking. Palladium is down $6 even to $950 flat asking, and palladium is down $4 to $23.40 $2,346 even. All right, and rhodium is up $300 to $15,500 an ounce. All right, so let's go ahead and get into some actual news here. All right. The first story is from ZeroHedge.com. All right, the U.S. government will inflate into the bitter end. That means you're going to keep inflating market price. You're going to keep pumping the market with cheap money. Cheap money is money that's printed out in the thin air. There's nothing to back it up. All right, there's no commodities that's backing it up. All right, this is from ZeroHedge.com. All right. All right, the big news organization says Joe Biden is the next president of USA. That claims election fraud. And the fixing of baseless. Do you know to believe them? Okay, we're gonna forget all that. All right, scroll down a little bit more, okay? All right. Without a question, the student debt crisis is a disgrace. There are roughly 45 million student loan borrowers who owe on the order of $1.6 trillion. All right. 45 million student loan debtors hold $1.6 trillion. This is the most debt is for federal student loans. All right, so what it is, most of these student loans, they're federally guaranteed. So that means if the student don't pay, that means the government is going to pay those so-called school institutions of higher learning. The government is going to pay them, but that debt is still there because people got to pay that money back to the government. All right, the federal government is responsible for this mess. All right, it supplies the credit that distorted the world in the way that would have been otherwise been impossible. The gas and massive amounts of federal student loans inflated a higher education bubble and an industry of entitled fake intellectuals. That is true. All right. We get down here to where the U.S. government. All right. At this point, the point is 1.6 trillion in government-sponsored student loan debt has piled up like a rush hour wreck on the I-405 freeway through Los Angeles. All right. This is the problem with the government making, and government solutions will only make things worse. All right. Here's why. Went down into reasons why. Okay. All right, get a hold of that story on zerohedge.com. All right, the U.S. government went inflating to the bitter end. All right, we go down here for a second, a little bit before we go to the next story. And how would the American people and public pay for it? U.S. government revenue for the fiscal 2020 was 3.42 trillion. All right, yet spending was 6.55 trillion. The difference, a 3.13 trillion deficit was made with the debt. All right. So if you really want to take a look at right now in the fiscal year 2021, remember we put on this channel. There's difference between calendar year, fiscal year, and the calendar year, fiscal year, and then you have quarterly fiscal. All right. All right. So the way it operates, remember the fiscal year for the government is different from the calendar year. All right. So the fiscal year ended at September 30th and for 2020, and now at October 30th. I'm sorry, October 1st, 2020, fiscal year 2021. All right. So with that being said, you have to look at according to the story here. Where I'm gonna read it again. And now, how will Americans pay for it? U.S. government revenue for the fiscal year 2020 was 3.42 trillion, and yet it spent for 6.55 trillion. That is more than double than what the U.S. government earned money. All right, the difference between 3.13 trillion deficit was made with that debt. All right, so not only did they doubled the amount of debt that they owed. All right, so go and look at that story. That's from zerohedge.com, okay? All right, the U.S. government will inflate to the bitter end. All right, so we switch over to John Waves of shadowstats.com. All right, here's some more numbers coming in from November. This is November 17th. Monthly October 2020 industrial production gained 1.008% on top of the upside revisions, yet it was down by negative. It was, it was down by negative 5.34%. All right, year to year, still far increasing and escaping the pandemic-induced collapse on top of the economic downturn that has been induced by excessive FOMC, the Federal Open Market Committee. All right, tightening in 2019, the Federal Reserve Board (FRB). All right, that's the acronym for the Federal Reserve Board (FRB). All right, October production gained 1.08%, having declined by a revision of negative 0.37%, previously negative 0.63% in September, with the gain of 0.73%, previously 0.44% in August. Over the same period, October 2022 productions declined year to year by negative 5.34%. September dropped negative 6.73%, previously negative 7.28%. All right, with August down by negative 6.71%, previously negative 7.01%. All right, industrial production has been annual decline since September 2019. For 13 straight months, dominant manufacturing sector gained 0.99% for the month of October against a revised gain of 0.7 0.07. All right. Sorry about that. All right, and previously negative 0.29% decline in September, and annual decline since July 2019. Manufacturing was down year to year. All right, it's down year to year to about a negative 3.90%. All right, in October 2020. All right, a revised negative 5.37%. All right, previously negative 5.99. All right, it dropped in September, all consistent with annual declines in manufacturing payrolls. The mining sector was down by 0.63, negative 0.63% in the month of October, down year to year from negative 14.45%. It's seventh straight month annual drop since the oil price war. All right, extended details in the following pending issues. All right, so we got numbers, we got real negative numbers declining everywhere. All right, this is not good, family. This is not good, not good at all, family. All right, that was from John Williams at ShadowStance.com. All right, and then we go to thestreet.com. All right, www.thestreet.com. All right, Superflow interest. All right, the story goes: China joins the negative yield club. All right, Superflow interest in Europe helped China to sell its first negative yielding debt, as it raised about 4.7 billion in three-part. Sorry about that. All right, raised about 4.7 billion in a three-part deal in euros. All right, the debt sale drew about a robust demand aided by China's rapid return to economic growth after tackling the coronavirus and the relative scarcity of Chinese bonds denominated in the common currency. All right. So basically, China has basically issued its first negative yielding debt. All right, so they can gain money. All right, they're issuing negative debt so they can gain money. But that's also a bad thing about it. When you have to issue negative yielding bond debt. All right, that means the debt is not earning any interest, nothing on it. It's continuing just losing value. That's how they try to raise money now. All right. All right. So there's more in that story right there. Go to thestreet.com and you will see that story. China joins negative yield debt club. All right. And then for our final story here, we go back to yahoofinance.com. All right. We're looking at South Africa descends into junk status after 2 downgrades. So this is not just happening in China. This is happening all over the world, everywhere. All right. Nations Credit Union, everybody's in debt, severe debt. You only hear about what you see about in the Western news media, what we hear in the U.S. about the election. They pretty much stopped talking about COVID. Now they're just talking about the election. But they're all along, we've been talking about the financial news, how all this stuff that they're talking about in the media is masking the economic downturn that is in play right now. All right, this is a worldwide economic downturn. All right, so let's get into it. All right, South Africa is in deep trouble after downgrading to junk status and 2 deeper downgrades. All right, South Africa fell deeper into junk territory after Moody's Investors Service and Fitch rating. That's 2 other major credit ratings, Moody's and Fitch. All right, rating lowered the country's credit ratings on Friday. The rating cuts came after the coronavirus pandemic plummeted the government's finances and pushed the economy into its longest recession in almost 3 decades. Finance Minister Tito, sorry about that if I butcher it, Tito Mwambi Wambani, MBOWENI. All right, said on Saturday the downgrades will have an immediate implication for borrowing costs and will constrain the fiscal framework. Still, South Africa has already dropped out of the FTSE World Government Bond Index after Moody's removed the nation's last investment grade rating in March. That may reduce the impact of the downgrades, according to Rizal Khan, chief economist for the Africa and the Middle East at Standard Chartered Bank. All right, the market implications of the latest rating actions move looks more benign, Khan said in an email note. If anything, reform monetary is looking more positive near term. All right. So go ahead and we can read more down in that article. Go ahead and get a look at it. All right, that was from yahoofinance.com. South Africa descends deeper into junk after two downgrades. So they've already had two downgrades already, and they got hit with another one. All right. So once again, I want you to thank you for joining us edition of Melon Economic News. Once again, please take care of yourself. All right, and as we say, become your own banker, become your own financier, become your own savings and loans. All right, become your own credit union. You are your own financial financier. All right, be safe and take care of yourself. All right, once again, thank you for joining us edition of Melon Economic News. Let's get it started.